Thank you so much to be here. I would like to start with quite an innovation. The ultimate form of money is currently arriving here in Europe, but we have seen the arrival of central bank digital currencies in various regions of the world. We have seen China has already issued its own CBDC for retail, but also for wholesale. But it's coming also to us here in Europe. And do you think that central banks and asset managers could benefit from this opportunity of the digital euros? What we will do for finance, for example, for settlement, or things like that? I would love to have your opinion, Bhavesh, on this.
Well, thank you, Remy. First of all, I do think that a central bank digital currency is going to be the reality in Europe to begin with. Other countries have been working on it, but in Europe, I think it's coming. Just yesterday we were discussing, might be 2027, might be even earlier than that. At IZNES, we had the opportunity to be the first experimentation on the digital euro for settlement of fund units on a blockchain. So it was actually the first of its kind in the world where you have a digital euro that is used to settle fund share transaction on blockchain. So that's already existing. The CDBC wholesale already exists, and experimentations are continuing with the European Central Bank. So the directive is that by 2027 you will have working models for CBDC, and CBDC is a way for central banks to modernize their infrastructure. It is a way to really embrace the digital revolution, and the transparency that you will have, that they will have with intermediaries, with banks, and mostly on the wholesale side is will bring about a paradigm shift in the way central banks conduct business. And they still control the issuance of the CBDC, so it's a very regulated and centrally regulated infrastructure in place, so they are happy about it. We are not talking about DeFi at all while we talk about CBDC. So central banks, I think, are embracing CBDC, and we will see this trend going forward, not only in Europe, but across all countries that are coming.
So that it means that this ultimate form of money has been also proposed because here in a blockchain system, it's only recognized a token. So it means that the current form of the money, scriptural and fiduciary, are not recognized. So it means that you cannot settle any transaction by using traditional form of money. And we have seen arriving of stable coins and other major cryptocurrencies which could potentially replace the transaction made by traditional currencies. Like a representative of a specific country. Do you plan to issue your own CBDC? If it's yes or not, please explain why.
So technically, LIBERLAND has the goal not to have any legal tender in order to encourage competition and choice. So that's one of the things. Though there is a currency in LIBERLAND, there is the LIBERLAND merit, which allows you to have a voting power and a citizenship. So you have to basically stake money in order to keep your citizenship. It's not something huge. You don't have to pay a huge sum to have that, but you have basically to show that you have an interest in the country, because it also means you are a citizen, so a shareholder. And this is the way LIBERLAND could have an excedentary budget, funding its own universal basic income by basically distributing dividends to its citizens. If we have an investment, a very important investment, for example, it would be unfair for the people who cannot settle there to not be able to benefit from that. So that's one of the ideas. Then we have the LIBERLAND dollar, but the LIBERLAND government will always be in competition with other people, so that's probably not going to be a CBDC that you could see, for example, coming from China, and probably not with the same monitoring of private life of people in LIBERLAND. But the complicated problem then is that CBDC going to compete with all the biggest ones? Will it prevail because it's freer? I don't know. That's typically the debate. Less freedom can allow you to do bigger things for some people, so that's typically something only the future will be able to tell.
Really interesting, this innovative position from a country. Really, really interesting. Thank you for sharing it. And I think, Pavel, you can help us to understand why for a central bank is now a necessity to have their own CBDC. Because of the context, because of your own activities, you've seen an increased demand for crypto assets as an alternative way to use as a payment, as a way to transfer value in quite all parts of the world, cheapest, faster than any traditional payment or financial system. Could you explain us your vision about it?
Yeah. Well, first of all, I think you're right when you said a lot of central banks are currently working on CBDCs, like everywhere. It's not just European bank, in Asia, in other parts of the world. It's fair to say that most of these projects at MVP stage or like a testing stage. We in Wirex, we were focusing almost during all entire existence on payment use case. Is it working or not working? Okay, that's working. Huh? So I think, so we're quite excited about these upcoming CBDCs. So the reason why central banks are doing these tests and MVPs is because the industry became that big that they can't ignore it anymore. It's reason number one. And reason number two is that e-money tokens on a blockchain can give you kind of a modern way to do payments. It's something which is working 24/7, so you can settle with your counterparties, I don't know, any minute, any second during weekends, and this is a big improvement compared to traditional bank infrastructure or even to payment infrastructure. And also on top of that, you've got the transparency which comes with blockchain technology.
Oh, sorry. Merci. So I didn't hear exactly everything you said. Sorry about that. I was with the mic. But I'm sure the audience understood. If it's not the case, please raise your hand. Okay, like I said. Perfect. So if we take account this necessity, okay, we have seen previous... J'allais le dire en français, mais ça ne veut rien dire du tout. We have seen just a previous experimentation from Meta, which is well known as Facebook. They tried to offer a way for their 4 billion of clients to use blockchain technology with the Libra experimentation. But what story, what lesson about this? The lesson is the blockchain technology is here. It means that any company of the world could propose an alternative of our current financial system. So it means it's a terrible threat for governments and for current central bankers. That's why they needed to issue their own CBDC and to seize the opportunity to improve their own infrastructure. And more than that, to go to the second innovation waves of the financial services for the settlement, for example. Could you, Bhavesh, explain us why it's so benefits to use digital euro for the settlements?
Yes, absolutely. So, there's always two ways to look at it, right? If we don't use digital euros, what do we use? Well, today, we still use paper and fax. That's as bad as it gets. So, when you're in the funds industry, when asset managers and investors are transacting, today a lot of transactions are still being made using paper and fax. That's how it is. Now, one way to revolutionize this space is, I mean, that's what we have been doing at IZNES, is to digitalize this whole process. There is one part that is missing. It's the DVP, the delivery versus payment. How do you do that? The way to do that is with a digital euro, with a CBDC. Because that's the only way you can make sure that the tokenized share can change wallets at the same time when payment is received. And payment is received for payment to be received and to be witnessed, to be received, you have to have CBDC. Now, bear in mind that some people have advocated the use of a stable coin, which could be used in lieu of the euro, but that does not fully automate the process because there's still a conversion process from the stable coin to the scriptural euro. So that's the only way to do a full digital process where fund settlement occurs on-chain is with the introduction of a CBDC, and in our case, in France, will be for the European Central Bank to come with a digital euro.
So it's also helped to accelerate the settlement of any transaction. For example, now if you want to purchase any stocks, it will take between 1 to 2 days, business days, to make the settlement. And perhaps more than that, depending on the specific assets. With blockchain technology, using a CBDC and a blockchain infrastructure, you are able to make the settlement in a minute. So it's a huge improvement of the market infrastructure. And when I work for Amundi Asset Management, I'm used to create investment funds. And when I discovered the blockchain technology with its first use cases, which is Bitcoin, like you believe or not, it's a money, it's not the question. Bitcoin has proven that blockchain technology could be the internet of value. And when you understood that, you cannot escape from this, because if you are able to see it, major companies are able to see it. That's why we have seen major transition. For example, in Switzerland, we have the 6 digital exchange, now currently moving to a blockchain-based infrastructure for the trading of bonds, which is a revolution. This is a revolution. So we are just at the beginning of something bigger and something huge that's currently coming from. But I would like to raise another interesting point, and I think all of you could take it. We speak about the traceability about blockchain technology, the traceability of each tokens. We can know where are they, but more than that, with the TFR regulation, now we have the obligation to identify who is the owner. Do you think that our own privacy is currently threatened by the upcoming digital euro? Recently, the governor of the Banque de France says the central bank will preserve your own privacy. Okay, that's true, but if it's the commercial banks who make the identification, it means the commercial bankers knows. Central bank no, but the commercial bankers knows. But is there any real discussion about that? Because when you pay by card, you are almost also identified about how you spend your money. So what do you think, guys, about this privacy debate regarding the digital euro? Who want to take it first?
I've got a mic, so I'll start. So the privacy is a big issue, but if you compare the CBDC to what we already have, we don't have privacy when we use in bank infrastructure. We have the card, Visa, MasterCard infrastructure. So in terms of privacy, I think we are not losing anything here. I still just maybe to get sidetracked a bit, but I think CBDC and privately issued stablecoins, so stablecoins issued by e-money institution in Europe, they will coexist, and you might not get the privacy, the level of privacy you want with CBDC, but you might get the privacy you want with other stablecoins. And the beauty of stablecoins is that they're interchangeable, so you can exchange CBDC to, I don't know, Euro E issued by, I don't know, right? A few companies issue, like Circle, Monerium, Membrane Finance, a lot of other guys. But reality is that I don't think you will get the ultimate privacy with government-issued token.
Okay, got it.
Well, As far as I'm concerned, I would say I have absolutely no trust regarding the respect of privacy coming from a government. So having a central bank saying, oh, you know, we are going to respect your privacy, beware of what private banks are going to do. Yeah, but I mean, it's not like it's not as if there weren't any example throughout history of governments violating people's privacy. So same thing as Pavel, I don't think we're losing anything. And you said Bitcoin, there's a debate about whether Bitcoin is a currency or not. There's a debate about whether the euro is a real currency or not. And I would say cryptocurrencies and CBDCs do not have to be perfect. They just have to be better than the current alternatives. And at the moment, the big alternative there is not about privacy. It's about the banking nightmare, and notably because 60% of the world economy is not in the G20 countries. And in many of these countries, it's a nightmare to get paid. You said sometimes you get paid in 2 days. No, sometimes you get paid in 2 weeks. Like if you have a business in Nigeria, what else than a CBDC or a stable coin or Bitcoin can allow you to be paid from a guy in Malaysia on a Sunday evening at 10 p.m.? That wouldn't happen with a state currency, and with a fully automated currency that would help. I'm not saying there won't be a privacy issue, but the privacy issue is already here. Technically, any government can already spy on you, and any private bank can spy on you. That happens from time to time. But one of the good things is that when the amount of people is huge, then basically the privacy concern is kind of drowned in the mass of people. So when there are many people, there's so much noise that the government cannot really spy on you, that private companies cannot really spy on you. Decentralized tech can help a bit, but there's so much noise that it's hard to take care of that. Ultimately, even with AI, there has to be some kind of human decision, and technically, Paris, for example, is kind of like a fiscal haven. Yes, France is not great in terms of taxation, but there are so many companies that they don't have time to control everyone. And even with an AI, there would have to be some kind of human intervention. So that's the same thing regarding privacy. The noise is going to be so huge that it's probably not going to be the main concern here. But that's an ethical question, of course.
If I may, with all due respect.
Of course.
You may, earlier you said that you question whether you can trust the government, whether you can trust the euro system. I beg to disagree, because it's a very downward spiral once you start questioning everything. You may not have trust in the government, but the institution, the financial institution, central banks, are here to stay. They are not dependent on who is actually in government. You have the monetary system that is built around certain norms and values that are here, and they are here to stay. Now, if you go that way and you say, well, for me personally, where I stand is that privacy is a legitimate concern. It's a very legitimate concern. But today, even when you pay with cash or when you pay with card, with all the anti-money laundering and financial terrorism combating procedures that banks have in place, when you do your KYC, when the bank does the KYC on you, the bank already knows who you are. You already knows all these privacy concerns that people might think they would have because of a CBDC, for me, are valid. But, as the governor of Banque de France just said, your privacy will be protected, even with the digital euro. I mean, it's not as if the equation here being made is a digital euro going to be similar to Bitcoin? Where your privacy is protected, no, it's not going to be the same. A digital euro is just a replacement for a scriptural euro, but with better safeguards in place for all money laundering, financial terrorism, and all these things. I think it's a good idea. I think it should be going there with the privacy concerns taken care of.
That's the ethical question that everyone is going to raise. For example, is this or that government trustworthy, which is a very personal question, but I don't disagree with you with the fact that the monetary system is here to stay. So in the end, it wouldn't be pragmatic not to embrace that tech, although the ethical concerns are something. I would say the ethical concern of privacy is a too serious question to be given to the government. It has to belong to the individuals. Everyone has to think about that question. Although I do agree with you, yes.
The real question is: do you really know how we create now the euro? Do you know?
Well, I studied.
Exactly. It means that it's terms of financial education. Every day you use a fiat currency without knowing how it's created, how many amounts of money are currently circulating under our own economy. And if we take a look about the history in terms of economical aspects, when we create a money, issuance of money is in principle directly based with the creation of value inside the economy. Now we have seen since the end of Bretton Woods agreements, we don't have any relationship between issuance of money and creation of value from the economy. And this is a huge trouble. And we are currently in huge trouble. What are we currently seeing it? Increasing of the interest rates. Why? Because we needed more money to satisfy the necessity of the pandemic, and to help the financial markets to survive the previous financial crisis. But in the meantime, we didn't create any value for our economy. So the result is we have a lot of amount of money currently circulating, which depreciates the unit value of your own money. And the only way for the central bank to destroy the money is to raise the interest. But in fact, who suffer from that? Citizens, like always, and companies, of course. But with the arriving of a digital euro, they will get probably new monetary policies, new instruments to control the monetary quantity of our own money. And more than that, our own system is based on a trust. It means that everybody agrees about saying that the note, which is a paper, is valued 10 euros. So it means that if the confidence, the trust move from this asset to another one, is possible in terms of economical aspects to change the money we use. Do we have an interest to use Bitcoin as a money? Of course not, because we don't have this kind of need. But if you go in Argentina, for example, Venezuela, who's suffering from huge inflation, for citizens and companies, it's better to use Bitcoin instead of the local money. That's why the perception of the necessity of a CBDC could change drastically between the different regions. Do you think, as a citizen of the world, we need to have a direct competition between money issued by central banks and private money? Do you think that? I know it's a dangerous question.
Well, but competition is always good for consumers. So as a consumer of e-money or money, I'm kind of interested in competition. Yeah, and I think the rise of stablecoins and rise of privately issued e-money, I think it was one of the factors why central banks are, launching the MVPs for the CBDCs, because they see it as a competition and they don't really want too much of a private money on the market.
Just to add to what you just said, the funny thing about stable coins is that the underlying asset that is actually pledging value to make that stable coin stable is highly unstable. That's the and for me, when you ask this question, we have to make a clear distinction of what we are talking. Because CBDC is not crypto. CBDC is not Bitcoin. CBDC is not Ethereum. CBDC is just a replacement of that euro note that you have in your pocket. That's what it is. Nothing changes. So, of course, it has intrinsic advantages for banks, for institutions, for asset managers, for investors to use CBDC. But when you ask this question as a citizen of the world, I think the better question would be for us to collectively think about how is money supply to be viewed in this ever-changing world. Do you still agree that a central bank has its place to issue money? If that's the case, then whether it is CBDC or that 10-euro note in your pocket, there's no discussion. Because then the discussion would be, who controls the money supply? Should it be back to, should we review the Bretton Woods Agreement? Should it be back to the gold standard? This will come to a whole different debate. But the debate between CBDC and money supply at the moment, for me, is non-existent because it is just a replacement of the euro that you have.
I would also add something, but agreeing with you, actually. Is competition necessary or is it good? I don't know. But the thing is, the average customer is lazy. Take a look at computer science, for example, and software. Is Linux better than Windows? For some people, it's much better because it does so much more. Okay, but why isn't it the dominant on the market? Well, because people don't care about how powerful or great the technology is. They care about, is it going to allow me to be lazier? So in Georgia, I saw people, like an old lady paying her coffee in Bitcoin. That means that the tech is mature. But she doesn't care about monetary creation. She doesn't care if it's issued by a central bank. As long as she doesn't go hungry, she doesn't care about whether it's a CBDC or not. So if there's a kind of competition, I think it's going to be, we're going to have a hard time seeing where it comes from, but it's not going to come from the base, from the people using it on a daily basis, because as you said it, many people don't even know how the euro is created, so they won't even care if instead of paying their coffee in euro, they pay it with a CBDC or with Bitcoin, and most people actually don't really care about that. Just as in China, most people don't care about social credit, they don't even think of it about it. So if there's a competition, it'll come from governments, maybe, between each other, I think, but probably not from the base, not from the end users. Maybe there will be a place, you know, we see still monarchies in Europe. We have Belgium, for example. Leopold II was not a very kind king in Africa, but he was a very kind king to his people, saying, oh, I'm going to lose my power, so let's relinquish some of it. Maybe some governments are going to say, oh, let's have some competition, because this is it's better to be the king of something than the king of nothing. So, in my opinion, competition will come from governments between each other instead of the end users. You disagree?
No, I totally agree. Totally agree. But at the same time, the government, except for the euro system, which is a bit different, every country in the world can print as much money as they want. Right? That's the basic problem or no problem that the government has. I mean, a lot of people say the Feds keep printing money. That's why the dollar is still the dominant and will stay the dominant currency in the world. I mean, these discussions do not alter the fact that the day the digital dollar comes out, the day the digital euro comes out, nothing of that is going to change. The governments, the system in place, are still going to be able to print as much as they want, as much as their policy in place has them printing the money.
Yeah, the rule of the strongest is, by definition, the rule of the strongest. They can do what they want.
Let's fight. I think that you raise an important question in terms of government perspective, but more than that, it's in terms of geopolitics. We'll take the example, for example, China. China is currently using its own CBDC as a way to improve the de-dollarization of the world. Because saying, we are creating new Silk Road, if you want to use it and save time and cost, you have to pay with my own digital currency. So it's how we are currently seeing a way to use a technology in terms of geopolitics. And do you believe, guys, that China could really succeed on this area to make sure that the dollars will decrease in terms of international money, or do you believe it's just nothing will after that?
Yeah, I can start. So that's a very good question. I think it will really depend if let's say China has CBDC, but if I'm in Europe, can I use it? So I think that the question is about if you actually spend it or buy, pay for goods and services and merchant adoption. I think what China is doing, and not just China, but other governments are, doing very similar thing, is a good improvement in terms of technological improvement. It's faster settlement time, it's more transparency, these sort of things. But as a way to remove dollar from the global market, but might be, a stretch, at least my opinion. So what I'm trying to say, China with CBDC won't be able to remove dollar or compete with dollar just because of that.
Well, I happen to speak Chinese, so I've been working there as a translator a few times in my life, and there are some concerns about the Chinese CBDC. For example, it has an expiration date preventing people from stacking money. And the Chinese mentality, for example, so some people say, oh, this is going to be the downfall of the Chinese CBDC. I don't think that, because the average Chinese citizen doesn't really care about it. The best thing for me to understand the Chinese mentality is the conversation with taxi drivers. Some of them told me about the yellow jacket movements in France, and they told me, oh, you guys see that, oh, this yellow jacket thing in your country, it means that democracy is showing its limits. You should have a system like ours. I even had a guy making a really clumsy U-turn on the street because he missed a street where I was going, and I saw many flashes from cameras basically scanning his license plate, and I told him, no, don't do that. I'm not that much in a hurry. I don't want you to lose some social credit. And the guy told me very laconically, oh, I don't have any right to blood transfusion, and my kids don't go to school anymore because of that, so don't worry about the social credit. And it struck me because the Chinese mentality is not really, they don't have these concerns about privacy or about expiration dates, maybe because of centuries of Confucianism, I don't know. But the thing is, that's not going to be the main concern, for example. My main concern about the Chinese CBDC is more the Chinese economy per se, so their demography, for example, the imbalance between men and women, because that changes the demographics over decades. That's one of the concerns. There are many of these things. I would be more concerned about Chinese economics than Chinese politics or Chinese mentality, to evaluate the success of this Chinese CBDC. Probably not the people, again, more macroeconomic factors.
Coming back to de-dollarization, all right, I'm not going to be political about this. I'm not going to be, it could be any country, right? So whether it's China, whether it's Russia, India, South Africa, the BRICS countries already have the de-dollarization movement going on. So that is a separate debate, okay? That is a separate debate because at some point, whether now or in the foreseeable future, the world has to come to an agreement as to whether they need a different alternative. I think today you have the dollar and you have the euro, which is somewhat an alternative to the dollar as currency, de facto currency of the world, right? When you have the digital euro or digital dollar that would come out, that would not change the fact that should China or India or Russia or South Africa or all these other 7 countries that have applied to come to BRICS decide to come with alternative CBDCs or single CBDC for all the BRICS countries, for me, this de-dollarization question is not linked to the CBDC revolution that is going to be felt across all these countries, and it is coming. It is coming. In some countries, it has already come. In China, it has already come because China took a leap of faith with CBDC, right? And it is my hope that more people from across all countries take this leap of faith, because that is the digital era that we have to embrace. Whether it's the dollar or the euro or another currency. I mean, That doesn't matter much at this point in time. The technology has to come through.
So in your point of view, the evolution of the tech is more important than the tech we're going to use?
Absolutely.
Okay, got it.
Interesting point of view.